Hello, everyone, and welcome into crushthestreet.com. I'm Kenneth Amaduri, and I'm joined today with a very special guest, a returning guest, someone who's a crypto enthusiast, Bitcoin specifically. He's an educator. He's even a dance instructor. This is something that I've been wanting to learn for a long time. And so he's got a great array of skills and understanding. He's just a really smart guy. He's Perrin. He's got the BTC Sessions YouTube channel. It's a pleasure to be speaking to him. Ben, thanks for coming on Crush the Street with me.
Yeah, thanks for having me. Really glad to be here and looking forward to the conversation.
Well, let's start off here. Prior to 2020, I felt like much of the economic issues that have been building up we were talking about and we were projecting. But in 2020, we're now like in the middle of much of the discussions of the past. For people who lost their businesses, people who are losing their jobs, people who can't pay their mortgages or rent, and to those who even, lost their lives to the virus. I mean, it's just a bleak picture for many people and a lot of solemn to acknowledge here in 2020. So what are your general thoughts as it pertains to, where we are right now in the world?
It's interesting because a lot of people in charge of policy right now are operating under the assumption that everything was great with the economy prior to the coronavirus, and that is the injections of liquidity that we see into the market are based on the predication that, again, everything was fine, but we really started to see the cracks in the economy much earlier than this, and we started to see liquidity injections way earlier than this, like back in the fall when the Fed was pumping money into the overnight repo markets. And a lot of people are just not privy to that information, at least like kind of your regular Joe that doesn't pay attention to a lot of these things. They are starting to see how much money is being printed. And it's a very interesting situation because a lot of people don't understand, I guess, why we're not seeing massive inflation right away, and a lot of people are assuming, well, if we're not seeing inflation now, then I guess it's not a big deal to print this kind of money just out of nothing. Yeah, we're kind of in this weird precarious spot where a lot of the decisions that have been made we haven't seen the fallout from it yet, but it is coming at some point. Mm-hmm. It's just difficult to kind of project when that's going to hit. But a lot of the people that have been saying for years, like, hey, as soon as the Fed tries to roll back some of its programs, as soon as we start to see liquidity dry up, we're going to run into issues. And that's exactly what happened, and that's why we started to see these repo market injections. And now it's just kind of like the economy is at a place where you can't stand still, and when something steps in the way, we see what we saw in March, that the massive drop. And it's insane to me that enough liquidity injections have come to have that kind of a bounce in the stock market, whereas Main Street, everyday people, are record unemployment numbers, and stock markets have been on this crazy rally. So I guess my main point is you're really starting to see the disconnect between Main Street and Wall Street nowadays, and the facade of the economy is great is no longer able to be kind of hand waved in front of people's faces, and people assume that everything's okay because it's clear that it's not.
Yeah, and it's really like a fleecing of the middle class and poor when you think about it, because these are the people that are really getting hurt in this crash. People are losing their jobs and whatnot. And so they're getting poor. They're losing assets in some ways. I mean, I know they're getting strung along a little bit with some paycheck protection and different things like that. But with this liquidity that's driving the system, it's the rich who have the assets, who, this side is losing money, and this side, again, is just having their holdings inflated. And it's a transfer of wealth that we're seeing in certain ways. And so the inflation component that you're talking about, I think it's really interesting. And it's a really interesting dynamic, because if the US economy was a business surrounded by a lot of other competition, if this business acts recklessly, there would be competition to go elsewhere and this one would fall, the free
Mhm.
market would. But we're in this world where things are just in a vacuum. People don't
Mhm.
have options. And that's what sustains this manipulated environment for extended period of times. But that can only go on so long until something breaks. And I think that's what you were alluding to. I'll pass it back to you.
Yeah, yeah, 100%. I mean, the US is in a unique position as they are the world reserve currency. And so it affords them not unlimited runway, but a lot more runway than most other countries. Other countries that are printing money, they don't have the luxury of everybody rushing to the dollar, their own, whatever their local currency may be, because again, most countries around the world don't have obligations in anything other than the dollar. Everybody's is there's the petrodollar, and a lot of national debt is based in US dollars. And so initially when you see a drop like in March, there's actually a rush to the dollar as people try to cover all their obligations. They need to get their hands on dollars and pay it off. And in some cases, they need to print more of their local currency to obtain those dollars. And so you see actually a stronger dollar in the short term. In the midterm to long term, perhaps not, because pumping trillions of dollars into the market in the span of a couple months surely will not just go over like nothing happened. And I think the interesting thing, comparing what happened this time around to like 2008, 2009, all of the QE then was essentially funneled into equities markets directly. And this time you're seeing a little bit of kind of like the UBI, universal basic income style, pump some of the money directly to Main Street. And I think because of that, you may see some more direct consumer facing inflation. Um, Not to the extent of what we're seeing with equities, because most of that money is still going into
Mm.
propping up the stock market. But you're starting to see some of the breadcrumbs thrown to Main Street, but they're not realizing that you can't just print money and have no consequences. That there's going to be some inflation now in regular consumer goods.
So do you think there could be a global inflationary problem, maybe with the dollar and other Western countries experiencing maybe a stronger currency, but against real goods, things start going up? Is that a reality?
I definitely think so. I mean, I should say that the Federal Reserve and central banks are notoriously good at kicking the can down the road. But I do indeed think that consumers will be affected in some way, shape, or form. Um, uh, there's so many interesting and funny ways to hide inflation as well. Like there's a new book by Monsieur Mamedoff called "This Book Will Save You Time," and he talks in that about shrinkflation, where a lot of the goods that you buy actually shrink in size but maintain their price, so you're getting less good for the same amount of expenditure, and it's so minuscule year to year that it's hard to notice, but over time it actually ends up being quite a bit. They were talking about in the UK, Snickers bars. They used to be like 230 grams and they were like 70 pence. And then literally 4 or 5 years later, they said that the average size of a Snicker bar was like 160 grams and like a pound 30. So
Mhm.
not only did the price go up, but the product shrunk. And I think we're going to see more of that, but it's gonna have to be a bit more blatant now.
Maybe it's good for our calorie intake to see
Yeah.
that. Um,
Yeah.
Ben, when it comes to some of these tech giants, Zoom, Facebook, Amazon, Google, they haven't really felt the pain the way a lot of other companies have, because they were used to a higher degree during this, pandemic. People were home; they were on Facebook more, they were on Netflix, they were using Google, and I mean Zoom. Zoom's even anticipating the price increase of just people using their platform for conferences in the future. Like, hey, this worked. We tried it and it worked. Why have as much office space as we've previously had? I mean, this is okay. So, to the degree that these FANG stocks, these tech stocks are just, so overvalued in so many ways. I mean, what are your thoughts on that? I know it's nuanced. I know it's kind of hard to just predict, but do you have any instinct as to what's going to happen with the valuations of these tech stocks, and especially as it pertains to how vital they are to the overall indices? I mean, a little bit of air being let out of these tech stocks would have serious implications on the overall market.
Yeah, I mean, when it comes to the tech stocks, it's difficult because, again, you've got, yeah, they're obviously, a lot of the tech stocks, they're based around, the valuations are not based around actual profits. It's you have companies that are just eating through all of their money and not actually turning that around into revenues. I mean, you've seen it with Twitter in the past, Facebook, things like that. Like for years, even like companies like Snapchat and WhatsApp, and where there's initially no clear path to monetization or how they're going to turn that around. I think that will just continue. I think that it's more the hype around what could be in a lot of cases as opposed to what currently is. And I mean, we see the same thing with even a lot of auto industry stuff when it comes to Tesla versus other major car producers.
Mm-hmm.
And you look at the numbers of how many cars are being sold and what the revenue numbers are versus Tesla. And when people buy Tesla stock, they're not buying it typically based on the numbers today. They're buying it on the potential of what could be done in the future and the shininess of the new products that look super futuristic.
Mm-hmm.
I'm not saying that I don't want a Tesla. They're a beautiful car. I'd love to have myself a future car, but at the same time, I think a lot of equity markets are not based in reality. They're based in a potential of the future. So I don't see that changing.
Yeah, good. It's so true. I mean, and so much of it is just marketing and optics. I mean, Elon Musk has made a name for himself, even now with just his move in California, kind of standing up against the government there. And then, being on a global platform yesterday, launching from Florida. And so, he's such a good marketer and a media darling. So, I mean, Tesla could make nothing but still have a crazy valuation just because people just are flocking to him for who he is. So, um, Ben, let's talk about Bitcoin. It's interesting, the chart, looking at it, I'm looking at it right now. We really are seeing the volatility mimic the trend in 2020 of the overall equity markets, the S&P 500, the Dow Jones. What do you make of that? I mean, I have my opinions on it, and I'm bullish on Bitcoin overall, but it does kind of make you wonder, like, why we got into this in the first place. Is it being a non-correlated asset? I mean, people might say, hey, I want to be in something safer. I'll just buy the overall equity markets and not, get into something that's only 10 years old.
Yeah, I think, well, a couple points on that. Number one, during a panic, during a crisis, correlation all trends to one, right? They like everything or I guess is just directly correlated, because any assets that you're holding, if you have obligations and you need to pay them off and you're not sitting in dollars, you're going to sell everything you have. We saw gold sell off at the same time. Now, so naturally, anybody that was over leveraged, anybody that was apologies, my
No worries.
doorbell going off. Anybody that was over leveraged, anybody that had obligations that were in dollars, that was holding any sort of asset, whether it be Bitcoin, whether it be gold, or whether it be equities, they had to sell them to honor those obligations. And a lot of people just wanted safety in their local currency or in the dollar. And so naturally everything was going to sell off together. Now, when it comes to the recovery, yes, the equities markets have gone back up. Gold has gone back up. Bitcoin, I think it's important to note that just before the sell-off, it was in and around the $8,000 range. It's more than recovered now. I think I was looking today. I think we're 94, 9,500, somewhere around that range. And I think that this has kind of set the stage to be perhaps one of the most perfect setups for Bitcoin as far as narrative and the reason why we're into it right now. In a time where we have unprecedented money printing just to prop up the stock market, Bitcoin has, instead of doing quantitative easing, has done quantitative tightening or quantitative hardening, and has actually reduced the flow of new coins, as is set by the protocol that nobody can change, and also has simultaneously experienced a recovery above that of where it was before the crash, without any central entity intervening in that asset. And so our recovery, which has been better than the stock market, was done without any injection of liquidity into Bitcoin itself. And so I think that we could see further hurt down the road for equities, but I don't think that Bitcoin will necessarily follow that path. And if that decoupling does happen, it's perhaps one of the best narratives that we've ever seen for Bitcoin. Not to mention that the stock to flow of Bitcoin has just, again, been slashed, and we're now the yearly inflation rate is below the target rate of the Federal Reserve. It's also lower than that of gold. So for the first time, we're seeing Bitcoin becoming the most scarce asset on the planet.
That's powerful. All right. So that's, you talked about some of the Bitcoin support, fundamentals, the future. And I'll be honest, as confident as I am in Bitcoin, I didn't over allocate when I got into that. Now, in hindsight, I wished I put everything into Bitcoin, right? And I think maybe a lot of people feel that way. But the same reasons people criticize Bitcoin, the same reason people didn't get into Bitcoin, the same reasons people think that Bitcoin can go to zero are the reasons that had me, let's say, hesitant to put a lot more money into Bitcoin, like everything I had into Bitcoin. Now I'm grateful for how I positioned I'm glad I repositioned when it went to 3,000. And even in this last crash, I repositioned more money. So I'm a believer. I'm a believer long term, but I can't say that I don't hear the other side of the argument. Some of the arguments of, hey, it's new, it's infinite. What if something else comes around? All of these things. So having said that, are there any things that make you hesitant about the future of Bitcoin?
Well, I mean, it's always important to think adversarially and think of the possible outcomes that could make Bitcoin fail. I think if we didn't think that way, that's when we start to potentially see some major attack vectors that are overlooked. So what could possibly ruin Bitcoin? I mean, there's always the possible of like a 0-day fatal flaw in the code base. But that being said, we're 11 years in. It's a $150 billion asset, and that is essentially the price tag of the bug bounty on Bitcoin. And so if $150 billion and every eyeball on earth that knows how to code, looking at the code base, trying to figure out how to game the system, has not yielded any results yet, I'm only growing more confident by the day that that's not a real attack vector, or at least it's not anything that could not be dealt with very, very quickly.
Why does somebody try to attack Bitcoin? Just curious, like, and to flush through that
Yeah.
for people, why does someone want to attack it, and what is that? How does that person gain from it?
So I guess there's a couple, to me, two main things stick out. Number one, attacking Bitcoin in the sense of trying to double spend transactions and create money that was not existent before. That has never been successfully done in the instance of confirmed transactions being reversed. That's just hasn't been a possibility because of proof of work, because of the amount of resources required to reverse a Bitcoin transaction and have it go elsewhere is just so cumbersome and expensive that to execute that kind of attack is just not feasible. The rewards that you would get would be far outweighed by the cost of executing it. But then there's the instance of perhaps nation states attacking Bitcoin. Right now, I think it's a little too early for them to care. It would be a very expensive attack to pull off, but if your entire monetary base is at stake, then it could be worth it. I think it's far too early for nation states to even bother attempting to pull off that kind of attack, allocating that kind of capital and resources and energy to doing it. And we'll have to see how quickly Bitcoin grows, because if it does grow too quickly, to the point where nation states are genuinely worried that they're at risk in the near term from Bitcoin, then yes, potentially you see governments trying to subvert the protocol by becoming the majority of mining, hashing power, things like that. I think that's still a risk, but I think that as the more time goes on, the less of a risk it is. We see mining decentralization continue to proliferate. I know that people will point to China and say, hey, more than 50% of hashing power is in China. But it used to be that more than 50% of hashing power was in a single mining pool. That was back in 2014, 2015. Ghash.io obtained 51% of all of Bitcoin mining hash power, which was scary at the time. But what happened was individual miners moved to different mining pools to mitigate that risk. And it only, they were only above 50% for a brief period of time. I think it was even just a few days. And now the worry is much less so, in that they're saying, oh, these combined mining pools are within a single nation. And that becomes much less of an attack vector unless the Chinese government were to not only clamp down, but also be able to actually locate all of those mining pools and find the people running them. Which would be a difficult proposition, but not impossible. But we're seeing a lot of hash power move stateside. We're seeing a lot of miners come online, especially kind of in the oil fields and natural gas down in Texas. Up here in where I am in Canada, in Alberta, there's a lot of miners coming here. And I mean, miners will flow wherever there's the most efficient sources of power. So I think, while that's an attack vector, and while we shouldn't discount nation states because it'll probably get uglier before it gets better, I also think that it's going in the right direction, and I think that those risks are less and less. Now, I wanted to jump onto one other point that you said. What if something else comes along, like the argument of, well, Bitcoin is MySpace and something else will be Facebook, and then something else will be whatever the hell's after Facebook.
Someone just Marco Polo'd me, and my wife's been using it, and now I have Marco Polo. I'm like, man, it's just what's wrong with some of the other stuff that's out there?
Well, yeah. And so the thing about that is you need to realize the why of Bitcoin. What was Bitcoin created for? And realistically, it was created. It was created as a response to irresponsible central bank practices, right? Like it was born in the midst of the 2008-2009 financial crisis. Quoted in the first block is chancellor on brink of second bailout for the banks. So, the ethos behind it was very much like, hey, we need a protocol with a monetary policy that can't be tinkered with by central entities that have their own interests at heart. Um, and you want transaction finality, you want immutability, you want the protocol to not be able to be subverted. You basically want that monetary policy, whatever it may be, to be set in stone, and so you're 100% certain of the outcome of at least the issuance of the coin. And when you look across the board, transaction finality and immutability for every other protocol is far behind Bitcoin. Where the next closest competitor would be Ethereum, and to get the same amount of transaction finality, it takes about twice as long, which isn't in itself that bad, except for Ethereum already completely forked and abandoned the previous protocol when somebody stole some money from the DAO back in 2016, I think. And so they reversed those transactions. So that kind of just speaks to the fact that if you're looking for immutability, Ethereum probably isn't the place to go. And they can hard fork on a dime. They forked the protocol in December of last year, December 7th. They forgot to add something to the protocol, and they were able to hard fork the entire network again on January 1st. Again, if you're able to take a large network like that and completely hard fork the protocol and get everybody up to date and ready to go that quickly, it kind of speaks to the fact that most people probably aren't running nodes and self-verifying everything themselves, which means that there's a small number of people that are actually controlling the protocol. When it comes to transaction finality for everything else, the next closest coin is Bitcoin Cash, and it's 33 times slower to get the same amount of security and immutability for a single transaction. And so really, like, Bitcoin is in a realm of its own, and it continues to kind of separate itself out that way because the amount of security behind every transaction and the certainty of the protocol is just unparalleled.
Yeah, I tend to agree, and that's the reason I've been invested in it, and I continue to hold on. I think there's a lot of upside, and I continue to interview guys like you because I want Bitcoin to get the respect it deserves. A lot of people berate it, they disparage it, they treat it like it's nothing, and then you have guys like Paul Tudor Jones would come out and endorse it. And when you mentioned nation states attacking it, it's moments like that when you have a really credible mainstream person endorse this asset, and then you go, okay, well, it's starting to get some traction. I wonder if we'll see some more resistance from the governments at that point, or maybe there's a bridging of the gaps where it coexists to a certain degree while also maintaining its autonomy and liberty aspects of it. I think it's an interesting point you brought up with China, where 50% of the hashing power is there, but there's also a lot of reason for the Chinese people to own Bitcoin and have Bitcoin and to keep it going. So I think the people that are mining it are probably pretty serious about the need for it, the role of it. And I wanted to ask you a follow-up question to that. Let's say something did happen in China. What does the free market do? Does it, is that a real concern if they crack down on the mining there, or does it just pop up somewhere else?
I think it migrates. Now, so China, it's important to know that the reason that a lot of the mining is there tends to be because of some of their energy infrastructure. So there's a lot of cheap hydro there that can't be used for other purposes. So you get hydro dams that are way off in rural China, and they're supporting towns that are kind of pretty far from most other grids. And so they are limited in capacity that they actually need. And normally, if you're running a hydro dam and you have a town nearby, once you've got the amount of power you need, the rest of the power is literally just wasted. You can't really get it out to any other grid because the power, the energy degrades as it's being transported long distances, and so it's not economically feasible to do so. So there's zero opportunity costs in not getting it elsewhere in the country. And so if you can harness that free energy you already have access to, that you're already taking some of, and funnel it into a basically free money for you, it's just a no-brainer to get a miner in there to set up an operation, and you get the kickbacks from that operation. So in an instance where China cracks down on this, number one, I think that you would see probably some people being paid off under the table. Like, what are the chances that the people that they send out to a lot of these facilities aren't going to just be passed a bucket of cash under the table? The mining pools themselves, again, I don't see them as a real attack vector, because the last time we saw anything close to a 51% hash power share in a single mining pool, people literally just moved to different mining pools, because a mining pool is not a set group of miners with set facilities. They're very geographically diverse. And then they can say, well, if this mining pool is trying to be sneaky and do anything and censor transactions, I'm just simply going to move over to this mining pool. And furthermore, if enough of a hash power is kind of subverted by China, and they start trying to censor transactions, all somebody needs to do to get around that is simply offer a higher fee, and the remaining hash power will happily include that transaction in a block. And so it becomes less feasible every single day. I think miners, if they need to, will shift their hash power to different mining pools, and people will pay the base layer fee transaction in order to get through.
Yeah, it's an interesting push-pull dynamic with the free market. If it's the reason why people want their freedom is to not be controlled, and the more they are trying to control these people who want their freedom, the more they're going to push away. So it's a really odd dichotomy in this situation. But at the same time, we are seeing the growing use of Bitcoin through mainstream channels. I mean, talk about retirement and using it as non-correlated assets to hedge funds and portfolios as percentages of managed money. I mean, these are all things that we anticipate coming into the crypto space. So let's. I know we're going on and on here on the interview, but I'm appreciating the discussion. What are your thoughts on this and kind of the dynamic between this anarchist asset that gives people freedom against the manipulated system, and then it coexisting with the system?
I think you're seeing Bitcoin Trojan's horse itself into the existing financial infrastructure. You're starting to see, again, the financialization of it. It's making its way into the markets here in Canada. We just had the launch of the first Bitcoin ETF. Essentially, there's a Bitcoin fund now listed on the TSX from 3iQ. You're also seeing things like just the other day, Bitwage announced that they are now offering a 401k that can be allocated to Bitcoin. And so you're starting to see it sneak into our everyday financial system. And so this is another reason why I do believe that Bitcoin will have a difficult time being subverted even by governments, because at that point, when it becomes so ingrained in society, how do you stop that? You also have a lot of politicians that are coming out as very interested in pro Bitcoin. And when you've got a bunch of closet Bitcoin, not even closet Bitcoiners, but like overt Bitcoiners sitting in the Senate and the House that are helping form policy, they're going to want to sway that a particular direction. And as it grows, I think you're going to see more of that. Now, the regulations that come out for that, they could be favorable, they could be not. The protocol doesn't care. So it's important that at the base layer to know that you can't regulate the protocol. You can only regulate, how businesses utilize it if they're on the up and up. Yeah, I think it's interesting because some people will say this is Wall Street and the institutions taming Bitcoin, but I think it's Bitcoin sneaking in the back door and just waiting to throw a wrench in the whole thing. I think it's going to have some very real implications down the road. And the beautiful thing, the more entrenched Bitcoin becomes, some of these practices of these how do I put this? Just some of these dangerous practices that most financial institutions are used to doing, fractional reserving things to high heaven. They're not going to be quite as possible when there's no central bank to bail you out if the asset you're holding is absolutely finite and there's no easy way to get capital injections to satisfy the demand for the asset that you've fractional reserved out and the obligations aren't being returned to you. So yeah, it is interesting. It is, I'm curious to see how it all plays out, but from what I'm seeing so far, I'm quite enjoying this everybody thinking they have a handle on Bitcoin, but really they have no idea.
And yeah, I totally agree with you. Things are nuanced and people want concrete, solidified answers. And if anyone has played poker, a lot of the times we are sitting around looking at a three of a kind, trying to base our decisions on how much to bet, what to do, how to proceed forward, with a lot of other variables going on around us and some unknowns that are on the table. And we got to figure out how to stay in the game, how to play the next hand. Do we go all in? I mean, sometimes you need to go all in, right? And sometimes you don't. And how do you stay in the game? And I think that's what we're trying to do with these interviews, is understand the world around us, try to gather as much information as possible to make the right bets. So I appreciate you coming on Crush the Street with me today. Thanks for your time. If people want to learn more about you, the work you do, please let them know where they can go and what they can expect to find.
Yeah, I'd say three main places. I've got a website, btcsessions.ca, and that's got, especially for Bitcoin beginners, there's a ton of free information there that you can learn about wallets and proper security, all that kind of stuff. You can obviously find me on YouTube, and that's where you'll find just all of my videos. I do daily news, as well as all my tutorials and everything there. And then finally, I'm most active on Twitter, so you can hit me up there at BTC Sessions. And those are probably the best three.
All right, Ben, thank you so much for coming on the show with me today.
Thanks a lot.